live from our studio in Atlanta, Georgia. This is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hey, everybody. Welcome back to another live stream. Today is Tuesday, and it is getting into late June now. And we are here back for another live stream, taking a look at markets, talking about what's moving and what is to come in terms of market news. I'm joined with James. As always, James, how's it going, man?
Pretty good. How's it going with you?
It's good, and kind of a quiet day, right?
Yeah, not a whole lot going on today, same as yesterday. We don't really have our first significant event until tomorrow with UK CPI here, expected to drop down to 8.4%. We had a surprise rate hike from the Bank of England about 2 weeks ago now, I believe. It was forecasted to they were forecasted to not raise interest rates, but that's not what they did. They actually raised 25 basis points up to, I forget what the number is, but it looks like the forecast is that the raise in interest rates is going to help that high inflation problem that the UK has been dealing with for the better part of a year now. But yeah, nothing too much going on today, but we will have UK CPI tomorrow, as well as Jerome Powell, the chair of the Federal Reserve. He is speaking tomorrow at 10 a.m. as well. So depending on what he has to say, that could be a interesting thing to pay attention to as well.
Yep, for sure. And anytime, again, Jerome Powell speaks, we talk about this often. The reason that's so important is because, of course, he has a very important role, and with the Federal Reserve, which sets our monetary policy in the United States, it has a lot to do with whether or not the markets are looking optimistic, pessimistic, so on and so forth. So, of course, it always gets a red folder whenever he speaks. Of course, we will have more stuff to talk about later on this week. We've got PMI and Fed Chair Powell's testifying again on Thursday. So should be starting to pick up starting tomorrow. But today is a good day to talk markets because there's a couple things that are really moving. James, take a look at this gold drop. We're seeing gold trade now all the way down to 1937. Notably, also silver dropped off a cliff as well. Silver back down to 23.32 an ounce. Metals market getting smoked today. Dollar is trading up just a little bit, but really it seems like a very metal specific move to the downside. So I'm sure we'll be talking about that. And James, thank you as always for the report today, and we'll have you back on tomorrow.
Yeah, of course. See you later.
All right. Always thanks to James for just coming on. He essentially keeps us in check in terms of upcoming news so that we don't get surprised here on the show. Hope everybody's doing well here. If you're just tuning into the stream, do me a quick favor and hit that thumbs up button. As we get started here, we're going to be taking a look at several charts, and I know a lot of you guys probably want to talk about this gold move. Let's also talk about the pound coming down. We've got some of the euro, the dollar. A little bit of dollar strength here this morning, but really seems like it's gold specific that is really making a serious move here to the downside. Look at this big push coming down real hard off the gold market. 1965 did trade, but now all the way back down we go to 1940, and now it seems like we are threatening to break out lower on the gold market. So I have to say, this is yet again another example with gold where I have not been able to take any trades. I've been long biased, but unable to take any trades as we continue to push lower. 1940 again, getting broken here this morning as we push through this low. The question will be if these gains can be kind of held. If we get hourly candles and 4-hour candles closing underneath, we very well may see gold sink lower. Why is this? Well, you kind of have some interesting stuff going on in terms of gold, but overall, it seems to just be stuck in a range-bound market. And sometimes, as simple as that, the market just trades in a range sometimes. And so we kind of have that going on. it's also sort of, we still are expecting to see interest rates go a bit higher in the United States. And actually, I'm interested to see what bond yields are doing today. Bond yields trading lower a little bit. US 10-year, let's take a look at that. Yeah, the 10-year came down pretty hard. So you got 3.725% on the 10-year. US 30-year. Yeah, interesting. One thing to note, guys, is that there was some news out of the housing market today, which was interesting. There was a sudden jump in housing starts in the U.S. Housing starts in the U.S. unexpectedly jumped 21.7% to an annualized rate of 1.631 million in May, the highest reading since April of 2022. So, yeah. Anyways, let's take a look at some stuff here. So in terms of gold, the question is, am I a buyer? And I've talked about this one for a while now. So for those of you who are regulars on the show, you know I'm not really interested in buying gold. I was really watching to see if we could get this move, the break and retest, and I would have been looking to get long, but we didn't really get that move. So for me, gold is kind of off the table. I do want to talk S&P 500 here today. S&P is another one that I am interested in getting long myself. If we get a bigger discount, if we get a pullback a little bit further, I may be interested in picking up the S&P on the long side. So we'll keep tabs on this one. This one had a lot of strength come into it. Again, indices and stocks in general just getting a crazy bid recently. I do want to be a part of it. I have been long on many stocks as well as some of the indices as well. We've been trading them. But in order to get back into another position, I'm looking for a deeper pullback around that 43.75 level is kind of what has my eye on the S&P 500. NASDAQ as well. NASDAQ looks really strong. If we could pull back, like I said, I've got my zones marked here. So if this does come into play, we'll look for an opportunity to get long on NASDAQ, but not quite there. Last week was really good for the indices trading. I'll show you guys that. So last week, inside of the group, we were super active. Last week was just a crazy busy week. And I picked up the S&P 500. After it broke out, it pulled back and I was able to get into an entry. So S&P officially jumped into a bull market, cooling inflation numbers, solid technical break and retest. Stops were just below structure and it was a momentum play to the upside. So I went long. And it just went and it went, right? It just kept going and going. And I was able to start trailing my stop loss. So you can see, I know it's a little bit small on your screen, but I actually had my initial entry here. My stop loss was trailed and I kept being able to trail that stop loss further into profit. So you can see here it was again, price moved higher and I was able to trail that stop again. Then we continued on. I was able to trail again and eventually price reversed and I was able to secure profits. So the reason I bring this up, the reason I talk about this is because sometimes people ask, Nick, how do you exit trades? And I talk about it with my trailing stop method, which is essentially where, I enter trades. Let's say I entered into this move and price breaks higher. At that point, I'm looking to tighten my stop loss and essentially continue to do that until the market tags me out. So in the S&P 500 example that I gave, right, I was able to enter into the move right here. So let me see if I can get that pulled up for you. So this is right where the trade was entered. So price broke out right here and I dropped to a lower time frame and I picked it up right here on the hourly. And I just was able to ride this thing out for quite a while before getting trailed out for a profit. So I'm looking to see if I can repeat that process on the NASDAQ and the S&P 500. Both of them are charts that I'm watching going into this week. So yeah, that's where I'm at with that. By the way, guys, if you do want to join our Discord channel, we do have that available. And here is how you can get some information on that. We're going to drop a link in the chat right now. We're doing something that we have never done before this time. We're doing 50% off any of our memberships. If you'd like to join our Discord community, you can join for the swing trade alerts, the options trade alerts. We have stock trade alerts from Frank. Frank and I both do swing trading. We have position trades on. So many different things that we're doing inside the group. So you get all the trade alerts. You also get access to the chat rooms, both our trading and off-topic chat rooms. We have a coaching webinar section. So we do webinars throughout the week, 2 times a week, usually with Ivan, who does those. He answers questions. He works with traders. Many of you guys know him. If you're not already in the Discord, now's the chance to join. Right now, if you message us, so if you message us right now, the cool thing here is that usually right now we're doing 50% off. But if you message us right now, this number goes to 55% off. For people who are in the stream right now, if you message one of our support reps in the office, you'll get 55% off. So again, when you click that link, here's what it's going to look like. Click that link. And again, we are looking for serious people. We're not looking for people who are just looking to get rich quick or anything like that. If you're somebody who is seriously interested in this stuff and you want to learn with us, this is the chance to get in for over 50% off. Just click the link, click 50% off and start chat. You'll be connected with a real person right away on my team. So there you go. And hope to meet some of you guys in the Discord. So real quick, guys, we're going to take a break. We're going to hear from one of our sponsors, and then we're going to come back and talk to Frank about some of the latest market moves, some things that I'm looking out for. I think Frank got trailed out of his Swiss yen trade. So we'll talk Swiss yen. We'll talk yen pairs this morning, and we can go from there right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back. Hey Frank, what's going on?
Good morning. How's it going?
Good. Frank, are you still in that Swiss yen trade?
No, I got trailed out last night, I believe. But
So
I am looking for another future setup on yen pairs. So Swiss yen, I'm liking that. Also pound yen, and specifically for both central banks are, gearing for a rate hike. So
yeah, I was going to ask you about pound yen. So, of course, you've got two very different currencies here, right? When you talk GJ, you're talking the pound, which is right now very, very hawkish compared to the Bank of Japan, which they are incredibly dovish, right? Meaning that they're not looking to raise rates, that they plan on keeping them low. And so when you have this divergence, when you have, pound yen trading like this, it makes a lot of sense in my personal opinion, as you have, the UK, which is struggling with high levels of inflation. We've talked about this story a lot on the streams. As they struggle with that, they'll be forced to probably keep rate and monetary policy tight, keeping rates high. And so that kind of creates an attraction to the currency, especially compared to the yen, which is sort of the opposite effect, where you get that lack of interest, in fact, even bearishness, especially recently, Frank, with all the stock market buzz and kind of risk on sentiment. Do you think that adds extra lift to the pound yen if that stock market stuff continues?
oh yeah, basically anything risk on favored is definitely going to go against the yen. So if stocks go up, there's some correlation with the pound and the euro. It's not 1-to-1 like I don't know for sure, but it's definitely like opposite of what you would say yen is. So in terms of sentiment, pound, euro, they're all they're all against or they're all risk averse, or I'm sorry, risk favored, whereas yen is risk averse. Dang, my mind is all over the place. But yeah, so if stocks go up, that's usually a sentiment of economic health looking forward. Pound and euro, Aussie, they all take advantage of that. And so like pairs like Swiss yen, pound yen, which are at the same time seeing economic expansion and a more hawkish central bank, is definitely good for pairs like these. So I'm looking at pullbacks on both on the 1-day time frames. They've had some steep runs to the upside, and just hoping that it comes back far enough to where we can catch a decent level, maybe on the trend line or something. But yeah.
Yep. Thanks for sharing, Frank. And Frank, I forgot to drink. Well, I didn't forget. I just didn't drink coffee this morning. And oh my gosh, I feel it. The streaming concept is way harder
Yeah.
when you haven't had any caffeine. Did you have your coffee?
It'll get you. No, sadly not this morning either.
Yeah. See, it's a different ball game, guys. When I feel like by the time you guys see me on these streams, I've had like 4 cups of coffee. I'm kidding. Only one is all I need. But man, if I don't have it, I'm like really struggling. So I might need to slip in some coffee here after the stream. Anyways, we are going to be bringing Tom here in just a moment. And Darnell in the chat just asked, does anyone know of a trading psychologist I can contact? I took my absolute worst trading day today. Gold ruined me. So Darnell, and to anybody else who feels this way, trust me, trust Frank. We've all been there. There's times where you make mistakes in trading. There's times where things go terribly wrong and you feel crushed and you feel depressed. And it's like, man, what the heck was I thinking? All you can do in trading is when you make ginormous mistakes is you can learn from them and you can move on and say, I'm never going to do that again. And you have to really stick to that because, again, people who continuously just gamble in this stuff, they can't control their emotions. They can't control their impulses whatsoever. It's really important at the end of the day. Even people that have great strategies and know what they're doing can be overtaken by greed, fear, emotions, FOMO. All those sorts of things are really strong. So here's what I would say, Darnell. I would genuinely recommend that you check out if you know Ivan from our live stream. He does some coaching one-on-one. If that's something you're interested in doing, I would highly encourage you to check him out. Of course, coaching is his time, so he does charge something for it, but he's very reasonable about it. And if that's something you're interested in, you can always find him. I don't do any coaching one-on-one. Frank and I we're outside of the streams, we're on the software dev side, we're building tools and things like that. So we don't really offer coaching at this time. You also could join our community if you're looking for other traders, realistic traders, no nonsense, no Lambos, no Gucci bags or anything like that. It's not what we're about. But if you're into actually trading and joining a community, we've got a really great community that you can join as well. Again, I've mentioned this many times. I think the investment of a couple $100 in order to join the group for a one-time fee is very, very worth the price, especially if you're serious about this stuff and you see yourself doing it for the long term. Join a group, pay the one-time fee, and be done with it. And now you get access to a great group of people. You get access to a lot of educational material, and you can see the trades that we're taking so that you can learn something from them along the way. So it is genuinely worth the price that we ask for the membership. And if you want information, currently right now, it is 55% off if you message into the support center on our website. All you have to do that is just click this link, and you'll be connected with one of our lovely people here at A1 Trading. We have a support staff that is on deck right now. So if you click that link, you'll chat with a real person from our team right now. So with that said, let's bring in Tom. Maybe Tom can help us out with our no coffee mornings here. Tom, how's it going?
Yeah, morning, Nick. Morning, Frank.
Hey,
How
Tom.
are you guys?
Good to have you back on the show, Tom. And Tom, so tell us, so Frank and I were talking a little yen pairs, coming down off their highs here. Gold tanking off a cliff today. Really quite a crazy move there. Gold yet again rejecting the 1965 mark and now trading back down at one point this morning around 1933. What are you looking at today, Tom? Are you looking at gold? Are you looking at yen pairs? We'll give you the screen share for a moment. You can share a little bit of what you're looking at.
Okay, cool. So I'm looking at them, but they're not at points where I can trade them. So if we start with gold, guys, and also a quick point, instead of coffee, beer is equally help to perk you up, guys. I always find. Probably a bit too early for you guys. Yeah. Gold, guys. I mean, just look at this disgusting price action. I mean, the market doesn't know what to do with this pair. So how can we trade it? Is my sort of feeling about this pair. You've just got buyers and sellers just fighting in this, I call these a box of indecision. There are no winners. You've just got buyers and sellers knocking heads and no one's winning as yet. So for me to trade gold, it basically needs to make its mind up. Yeah, if I get if I get a move out of this box, you know, we get a green candle like this, looks something like this, then, you know, once we get a break of these boxes of indecision, they're normally very quick and aggressive moves. So if we see a bullish candle like this, I'll be buying it. And equally, if we get a bearish candle, you know, that looks something like this, excuse my drawing of a candle. Yeah, and then again, I'll be shorting it. I don't particularly have a bias until it breaks out of this zone. And then I will trade it. Yeah, I like these boxes of indecision. They normally lead to good setup. So whichever way it breaks out of this, you know, disgusting price action, I'll trade it. If we look, I mean, like, just there's a little one here. There was a few days here with gold where there was a bit of a box of indecision. Okay. And then all I'm looking for, guys, is a winner. Yeah, you've got sellers and buyers just fighting to the death. And until you get a winner, I'm not interested in it. And then when you do get a winner, like this candle here, you know, look at the pips you can take with that trade. You know, they normally move quite quickly out of these boxes. So yeah, that's what I'm seeing on gold. I won't touch it until we get out of this box.
Yeah, and it's been a really stubborn box at that. I mean, this is going on several weeks now of just back and forth price action, and you know, a lot of traders. We talked about this in the past too. Is a lot of traders insist on trading one particular asset or two particular assets. And if you guys notice on the show, if you're a regular viewer, you know that we look at a lot of things. We look at dollar pairs, yen pairs, gold, indices. You know, heck, I even get into bonds sometimes. Like, there's so many different things to look at and talk about in the markets. And sometimes, if you are the sort of person who trades gold only and you're looking for trend following setups, for example, well, unless you're dropping down to a really low time frame, it's been really hard to find any significant trends on this chart. Sure, you could possibly get down to like the 5 minute and say like, hey, there's some moves here, that sort of thing. But again, there are, you know, many things out there to look at and to trade. I'm not encouraging you to trade a million things. I'm just saying that, you know, sometimes a particular market is just not going to give you the setups that you're looking for. And that's okay. At that point, it's okay to just maybe look at something else, maybe find something that is behaving in the way that you want it to. You know, a dollar Swiss is inherently or historically a very choppy pair. So if you like trading range bound moves, perhaps you look to dollar Swiss for sort of range bound back and forth plays. However, you know, during this time that works great, but then there's periods of time even in that pair where, again, things start to trend very clean one direction, and you kind of have to be a little bit adaptive to what is moving the way that you trade, I guess. If you're a range bound trader, this is great, but if you're range bound trader, this is really tough, right? So you have to kind of be adaptive in that way. So Frank, you got trailed out of Swiss yen. You were talking about a pound yen as well. Where are you at with gold or indices? Do you have any setups that you're looking at or plans for those markets?
Yeah, so I do like gold. I still have a bullish bias on it. I'm not in any trade at the moment. But what I like is this very stubborn demand zone in the 1930s. You know, prices just hit that so many times and hasn't broken underneath. I guess you could say the same about this long-term trend line, but you know, it kind of stayed where it was at, and until it breaks underneath, I'm not really looking to long or short. But you know, like you said yesterday and what Tom said today, a break above that resistance level 1960, 1970 would be some kind of confirmation. So I'm kind of with you guys. I'm not really looking to trade it right now. And if it breaks underneath, I don't even know if I would really want to short it. I do have this long bias towards gold, and I'm hoping that it can actually figure things out and move to where the market is kind of feeling. although COT is definitely counteractive to that. So having said that, though, the only clear thing I saw this week from COT was on the stock market. So the S&P and the NASDAQ saw some pretty good additional long contracts coming in for the week. And on a technical side, it kind of, pulled back on the 1 day time frame, couldn't really stay above that channel. So it's kind of similar to yen pairs. I'm looking at a deeper pullback so I can enter in at a better price, but you never really know with how resilient the stock market is. So just looking at any kind of bullish setup, I guess.
Yeah, Frank, and I wanted to just detail what you were saying about the COT. Of course, I pulled it up while you were talking. Indices been really strong. And what Frank was talking about in terms of the COT, if you heard him say that and you were unsure of what he meant, of course, we're talking about the commitment of traders data. This is a way to look into essentially the positioning of institutional traders. So in the United States, the CFTC requires large institutional players like big hedge funds and money managers to disclose on a week-by-week basis what they're buying and selling. And so Frank mentioned the indices, so the S&P 500, the Dow Jones with the US 30, the NASDAQ or the NAS 100, the JP225. This is not a US indice, but it is the Japanese stock market, the Nikkei. When we look at all of these assets under a microscope and we say, what's the latest in terms of development here, you'll see that the NASDAQ has a slight preference for buy side. The Nikkei has a very strong preference from institutional traders on the long side. So big money is buying the Nikkei. It's buying the NASDAQ slightly. And it's kind of still on the sell side of US 30 and S&P 500. However, what Frank was just pointing out was the recent change or the recent developments in these particular assets under these columns here. So this shows you, as of the most recent weekly reporting, what the change in those contracts is looking like. So when we look at the S&P 500, what we see is that on the short side, we had a significant decrease in the number of short contracts opened. And if we take a look at US 30, same story. And if we take a look at the NASDAQ, same story, and even with the Nikkei. So when we look at all the indices, we see money flowing, closing out of short positions. And if we flip it around, the S&P picked up some longs. US 30 was about flat with a little bit of decrease in longs. The NASDAQ, slight increase in longs. And the Nikkei, some decrease in longs. Overall, though, the story that Frank pointed out, the decreasing in shorts is a very interesting component. You have to think, if there's a lot of hedge funds and they're very heavily short against the indices, and now they're starting to unwind that trade, meaning they're starting to undo their trade. They're starting to take off shorts. They're perhaps covering, perhaps taking profits, perhaps taking losses. Doesn't really matter what's happening there. The point is shorts are coming off for institutional traders. And that's a big deal for talking indices. So I think that Frank and I have been talking about this a lot. That gives some room to the upside for the indices. Now, of course, buying it at the highs is a tough call, but keeping tabs on it for looking for pullback plays to buy dips is something that I definitely see myself looking to do on things like the S&P, the NASDAQ, etc. So that is where I'm at with the indices. Dollar getting a little bit of a bid here this morning, probably putting a little pressure on the S&P. If that keeps coming down, I'll be looking for pullbacks personally. Tom, what do you think on the indices? Do you have any take on those?
Yeah, so just NASDAQ in particular, if we look at the weekly chart, this is the weekly chart for the NASDAQ. It's currently hitting some, key resistance level here. So it'll be interesting to see how it reacts here, because I just can't help but think it's due a retrace. It's so overbought. But yeah, buy the retrace really for any of the indices pretty much, and how far this will retrace, we're not sure, but yeah, it's just a case of it. That a retrace is due, and this seems like a pretty good level for that to start happening. If we take a look at the day chart, yeah, I mean, we're getting a couple of days of selling pressure, but nothing too dramatic. It's a tricky one. You want to buy the NASDAQ, but You just have to wait for value, you know. And when I say value, I mean a retrace. It could retrace to somewhere here, you know, potentially. But there's just no value for me in trading this pair. I talk a lot about value, and a retrace gives me value. I just get in at a better price. If I'm gonna, you know, sell a car or buy a car, I want to buy it at a cheaper price than, you know, than where the Nasdaq is now. If I start buying it up here, I'm paying a premium. If I start buying it here, I'm getting a bargain. You know, it's just that idea of value, really. So, but where will it retrace to? You know, that is the $1 million question. But yeah, I cannot trade it at the moment. Yeah, it's just too early for me.
I definitely agree. I mean, it's had at this point several weeks of just upward direction only. A lot of optimism coming into the equities market. A lot of you know, risk on sentiment kind of flowing in. But again, still, even though, you know, you might have something like a great company like Apple or Google or Microsoft, these companies, even though they're excellent companies, can still get overvalued. Like you mentioned the word premium, you can still pay a premium for these things if they're trading very high. If their valuation is extreme, you know, you have to be careful buying those things, because if a bump in the road comes along and the equities market takes a tumble, you don't want to be the last one to buy. Really, when it comes to indices, I like to trade pullbacks. I do like to try and sort of, as a momentum trader, inherently still sort of buy high and sell higher, but I don't want to buy the highest point, right? So as a momentum trader, inherently what ends up happening is you're still looking for an uptrend. So it's already up, right? So you're buying high, but you're looking to buy at a calculated point where you can still control your risk. So let's say, for example, we picked up a buy around 14,800, stop losses below, and let's say it doesn't work out. No big deal. I'm not going to take a ginormous loss in the account. Perhaps I try again at like 14,500, stop below structure, keep it managed, you know, that sort of thing, where we can kind of still control those risk variables as well. Absolutely awesome stuff from both of you guys. Thank you for joining us, Tom, today, as always. And I do want to say, before you leave us, let me remind everybody, if you guys do not already subscribe to Tom on YouTube, he's got some great content of his own. So click this link. We just dropped it in the chat for you. Click that link and you'll be taken to Tom's YouTube channel, where you can subscribe for more of his content and commentary. And Tom, thank you for coming on the show.
Cheers, guys. Thanks for having us. See you next week.
See ya.
Bye, Tom.
All right. And Frank,
see you.
Same thing for you. Thank you for coming on, as always, with some commentary and good points there, as we've been talking about that the unwinding concept on the COT data. We'll see you back tomorrow as well.
For sure. I'm gonna grab some coffee.
Yeah, same. All right, guys. There we go. So Tom, Frank, as always, thank you to both of them for coming on the show. Both excellent commentary from them. So with that said, guys, I do also want to remind you, remember, if you have not joined our Discord, we're going to be closing up the stream here. But before we go, click the link that's in the chat right now if you want 55% off. This is coming into our last call here. We are ending the sale this week. 55% off all of our memberships. You get access to the trade alerts that we are sharing, Frank and myself. We do options. We do swing trades for FX, currency pairs, commodities, indices. We trade it all, and you get access to all of Frank and I's trades inside of the Discord channel. So click that link right now. Message us while this sale lasts. Again, any membership, if you want to try us out for a month, if you want to go for the yearly or the one-time lifetime fee, all of them are half off plus an extra 5%. if you message us using this link specifically. So send us a direct message. It'll open up a chat. You can chat with one of our support reps and get 55% off today. And again, that is ending this week. So there we go. Thanks, guys, for tuning in. Have a great rest of your week, and we'll see you back next time. What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half-off discount sale.
Oh, that's right. I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.